Hello and welcome. If you're a contractor here in the UK, seeing the words Outside IR35 on a contract, well, it can feel like a huge win. But what does it actually mean for your tax bill? Let's dive in and figure it out.
Now, we're able to break all this down today thanks to the specialists over at My Tax Accountant. They've put this whole guide together to bring some much-needed clarity to a pretty confusing topic.
So, you've landed that contract and it's confirmed. Outside IR35. That's great, but the big question is still hanging in the air, right? What does this actually mean for your wallet? That is exactly what we are going to unpack today.
Let's be honest, the UK tax system can feel a bit like a busy motorway. It seems intimidating at first, but you know what? Once you understand the rules of the road, it's actually pretty manageable. And our goal today is to give you that roadmap. And that journey, well, it has to start with getting the language right. Because before we can even begin to talk about numbers and savings, we've got to be crystal clear on what Outside IR35 actually means. So, here's the bottom line. Outside IR35 confirms that you are a genuine business. You're not what HMRC calls a disguised employee. You're operating independently, usually through your own limited company, and that means you are in the driver's seat when it comes to managing your own tax affairs. You are not on the client's payroll. And that distinction is just so important. When you operate through your own personal service company, or PSC, you're in control. You handle your own tax, you can pay yourself with a smart mix of salary and dividends, and you get to claim your business expenses. Now compare that to an umbrella company, they basically act as your employer. Yeah, they handle the admin, which is nice, but because they're deducting taxes for you through PAYE, it's often a much less tax-efficient way to go.
All right, now that we've got the theory down, let's get practical. The very first, and I mean first, action every single contractor should take is a quick, simple financial health check. You've got to look at your tax code.
And if you're thinking, oh, that probably doesn't apply to me, just listen to this. Last year, over 1.4 million people in the UK got an income tax refund, and the average payout was nearly 800 quid. That's not a small rounding error. That is real money being left on the table. The real question is some of it yours?
Finding out is actually really straightforward. Okay, step 1, find your tax code. It's right there on your payslip or your P60. The code you're hoping to see is 1257L. Step 2, jump online and log into your personal tax account on the gov.uk website to double-check that it's correct. And step 3, if you see something weird, like an emergency code, W1 or M1, get on the phone to HMRC right away to get it sorted.
And this is where it gets really real. Let's talk about Raj, a software developer. He was being overtaxed simply because he was on the wrong emergency code. After he made one phone call to HMRC and filed his expenses correctly, he reclaimed nearly £3,000. It's such a powerful reminder of why that quick check is absolutely vital.
Okay, so you've confirmed your status, you've checked your code, now for the really empowering part. This is about understanding exactly what you owe and, more importantly, how you can legally shrink that bill to maximize what you actually get to keep. Let's make this totally concrete with a simple example. Meet our contractor, Tom. He's got a total income of £75,000. So as you can see, the first thing we do is subtract his £8,000 in business expenses. Then we deduct his tax-free personal allowance. What's left over is his taxable income, which leads to a final tax bill of just over £13,500. You see? When you lay it out like this, it really does demystify the whole process.
And you know, those expenses are where being outside IR35 really pays off. We're talking about things like mileage for your work travel, a portion of your home office bills, the software you need to do your job, professional fees like your accountant, and even the laptop you're working on right now. Every single one of these can be claimed to directly lower your taxable profit.
Whew! We've covered a lot of ground, haven't we? From definitions all the way to deductions. So let's bring it all together and focus on the clear, actionable steps you should take away from our discussion today.
Here it is, your 4-point action plan. Number 1, use the official government CES tool to confirm your IR35 status is correct. Number 2, make checking your tax code a regular habit. Don't just do it once. Number 3, be absolutely meticulous about tracking every single penny you earn. And number 4, be just as meticulous about tracking every penny you spend on the business so you can maximize those deductions.
Look, at the end of the day, being outside IR35 puts you in control of your finances. The real question is, are you making the most of that control? Every contractor situation is unique, And while this guide gives you a solid foundation, getting professional advice that's tailored specifically to you is honestly the smartest move you can make. If you do need some help, the experts at My Tax Account are there to guide you.